What's up, Digital Collective? This is Rashina.
And Sean.
Listen, we are super excited to be able to bring you part one of the video series that we said we were going to do on the Genius Act, where we are dissecting this act so that you don't have to. We're going to break it down for you in a way that no one else has.
That's right, babe. Over the next two videos, we're just going to break everything down, every major piece down of the landmark legislations. No jargon, no hype. We just going to give you facts and help you to understand about this financial system that is changing around us.
And before we dive in, we want to let you know about our beginner's guide to crypto. If you haven't had an opportunity to download that, we're only going to leave that link out there probably for like maybe a couple more days, maybe 2 more days or so, for you to be able to download that free guide. It's a comprehensive guide with diagrams and explanations. We have really beefed up this guide for you. It is a 48-page document where we cover facts from A to Z about crypto. And if you're intermediate or intermediate or advanced, we have stuff in there for you too. We are even going to teach you or give you a way to show you a way that you're able to go ahead and play around with crypto without using your real coins. So this guide covers a lot. A lot of the questions you probably have about the crypto space is included in this guide. And again, we're giving this to you for free for maybe about 2 more days, and the link will be removed. So act now if you want to get it. The link is there. It'll be in the description. All right, so let's just jump right into the Genius Act.
All right, now, what do a Genius Act stand for? I'm glad you asked. Genius Act for guiding and establish national identification for the United States stable. And the official bill number is S.15, and it's in the 119th Congress. Yes. So this law focuses specifically on one thing: stablecoins. It's not designed to regulate Bitcoin, Ethereum, or any other crypto. Only stablecoin.
And so for our newbies, again, we always make sure you're covered. You may be asking, what are stablecoins? So we want you to think of them as digital dollars that you can send over the internet instantly. I want you to understand, though, while Bitcoin can swing wildly from like 50,000 to 60,000 in a single day, a stablecoin like USDC or RLUSDC is designed to always be worth exactly $1. So no more, no less. Stablecoins are the bridge between traditional paper money and the digital world. So you may ask, why does that even matter? It matters because you may want to send $1,000 to your cousin, internationally somewhere. And with traditional banks, it might take you 3 days to send that and cost you maybe $30 in fees. But with stable coins, it could happen in 30 seconds for under $1.
Now, 30 seconds. That is awesome. So I'm gonna give you some key facts on what's going on with the Stable Act. I'm sorry, the stable coin. First, the Trump, he signed it into law July the 18th, 2025. It passed this excuse me. It's passed the Senate 68 to 30, and then it went to the House, where the House passed it 308 to 102. The next
strong bipartisan support, right?
Oh, I'm sorry. Yes, yeah, yes. This is the first major stablecoin in the United States history. That says a whole lot right there. And only covers stablecoins. Bitcoin, Ethereum, and other crypto are regulated separately. If you want to get some further information, you can go to the is available on the Congress.
Right. You can check it out there. And so just to give you some real world impact, before this law, if you use stable coins to buy something and to send your money overseas, those transactions existed in a legal gray area, but now they do not. So from that, we're going to just jump right into our first pillar that we're going to talk about. And the first pillar we're talking about, what my husband's going to talk about, is reserve backing. So Sean, can you tell him what reserve backing means?
Oh yeah. Reserve backing is it's actually money that shift behind every digital dollar. Think of it like this. If you had $100 gift card from Target, and the Target had to keep $100 worth of real value somewhere to honor that card, so that it's the same principles applied to the stable coins. This section, stands for payment stable coins issuers. mandates that stablecoins companies must hold exactly $1 of real world assets for every one stablecoin they use. The law requires 1-to-1 backing with no exception.
And I'm gonna interrupt you 1 second, Sean. Let me interrupt you 1 second. That title is called, just to correct, that title is called Standards for Payment Stablecoin Issuers. That's Section 4 of the Genius Act, y'all.
I'm sorry. Yeah, thank you for having my back.
No worries. Go ahead and finish it.
What qualifies as permanent assets? The law is very specific about what counts as safe backing. United
Let
States
me jump
dollar.
in here, Sean. Let me finish it up for you, okay? Is that okay?
Go ahead.
Okay. All right. I know you killing it. Let me just jump in a little bit for you. So what qualifies as permitted assets, right? So the law is very specific about that. What are permitted assets? And this is the reserve backing we're talking about. It has to be US dollars and bank accounts. It could be short-term US Treasury bills, which is like government debt that matures in less than a year. It could be repurchase agreements backed by US Treasuries. And what that is, a repurchase agreement is just a transaction where one party buys a U.S. Treasury security from another party with an agreement to sell it back to them at a specific price at a future date. It can also be other high quality liquid assets approved by federal regulators. So that is exactly what the permitted reserve backing assets could be that are qualified under the Genius Act. And so who decides what is safe? I'll let my husband jump in on that. Are you good to talk about that?
Yeah, yes, the OCC actually makes sure is to do the regular federal banking regulator to make these decisions. So not all the stablecoins companies themselves. So
Themselves.
yes, so basically the OCC makes these decisions concerning these stablecoins. So in 2022, a project called Terra USD collapsed overnight. Remember, y'all probably, if you've been in crypto for a long period of time, you remember about Terra collapsing back in 2022. And with this collapse, destroying over $60 billion in value. Why? Because of this. This wasn't backed up by real dollars. So this caused a big collapse in the market. So a lot of people lost a lot of money during that time. The OCC had to make sure that now, moving forward, after this happens, they had to make sure that they have some things in place for stablecoins to move forward.
Right. And I'm gonna jump in. So that how they verify that these monthly examinations are being done. So they have independent certified public accounting firms, plus regular federal regulators that can inspect the reserves anytime they want. And so what that means is that if you hold a regular or regulated stablecoin, you know that there's real assets that's backing it up. So not like what my husband described with the Terra USD collapse that destroyed $60 billion in value overnight because it was not backed by real dollars. So that is what that reserve backing section really covers. Again, it tells you in the Genius Act what qualifies as permitted assets for these stablecoin companies to use to back up their stablecoin. So again, I'm going to go over that one more time. It's US dollars and bank accounts. It's short-term US Treasury bills. It's repurchase agreements backed by the US Treasuries and other high quality assets approved specifically by federal regulators. So if it's anything outside the first three, it has to be approved by federal regulators to be used as a reserve backing asset for these stablecoins. All right, so I hope that you guys got that and that we were really, really clear. If you have a question on that piece, please put it in the chat. Not the chat, I keep thinking the chat, but please put it in the comments so that we can make sure that we answer your question if we know the answer. Now we're going to jump into pillar 2, which is the clear transparency section, and we're going to be in section 4 talking about that. So you could tell them what that requires in section 4, Sean.
Yes, section 4 is a mandate monthly public disclosure of reserve composition plus the CEO/CEF certification and audited by registered public accounting firms.
I'm jumping in, Sean. It's CEO and CFO certification.
Okay. The stablecoin issuing company is personal criminal liability for false reports up to 5 years in prison and $1 million fine.
So stop right there, Sean. Like I said, so they have some stiff fees, right? So executives in these stable coins have some stiff penalties regarding this transparency section. So they're saying that, if you're falsifying something, right, that you face personal criminal liability for false reports for up to 5 years in prison plus $1 million in fines. That's a big, hefty price to pay to falsify some reports.
Yeah, I kind of wonder why, but why would you even think about doing something that major, and you know that you can get yourself in some serious trouble? That's
Right,
crazy.
right. But people do it because that's just like what you said, the Terra USD collapse, right?
Collapse. Yeah,
Right. So
that's
that
true.
they
Yeah,
had to be falsifying something.
yeah, yeah. Oh yeah, a big time, because if
So
you talking about
right,
$60 billion, that's a lot of money.
right. So what happens if they don't comply? If these executives don't comply, federal regulators can shut them down immediately and impose daily fines of up to $1 million daily.
Daily. Ooh.
Right. So you want to tell them like how the steps that how they can check the backing, what backs your stablecoin. So here we're going to talk about how you can check what backs your stablecoin. What is this company using to back your stablecoin? So give them some points about how to do that, Sean.
Yes, first they say go to the Stablecoin issue website. You want to
Mm-hmm.
make sure they have because there's a lot of people out here can create websites and it's not legit. So you click
Right,
on
right.
that, and next thing you know you losing a lot of stuff, a lot of data information. Second, is you look at the section called Annotation
Ask that.
Reserve Report or Monthly Disclosure.
Uh-huh.
Third, you download the most recent monthly report.
Huh.
And fourth, you look for a breakdown showing percentage of cash, treasury bills, and other assets. And
Right.
lastly, you'll verify the report is signed by a recognized accounting firm. So they that you got to look for to make sure the companies are legal and legit.
And to see this is a step specifically to see what their stable coin is being backed by. So he just gave you the steps to see how you can check what a stable coin is being backed by. So there may be other ways to do this. We're not saying this is the only way, but this is some to give you some help to figure that out. So just to give you a real world example to make sure we're not losing any person that's doing the space. So imagine if you had a bank to tell you every month that we're keeping 30% of your money in cash and 60% in government bonds and 10% in high grade corporate bonds. That's transparency. So the bank is telling you every month how they are backing up your cash, right? And so before this law, many stablecoin companies would just say, trust us, your money is safe without proving it. Now they have to prove it. All right.
That's good.
Now they have to prove it. And so, Sean, I'm gonna jump right into the bankruptcy part. This is pillar 3. This is the bankruptcy part.
Okay.
And so there's something there like what that discusses bankruptcy priority with these companies. So if the company goes bankrupt that it has issued a stable coin, that's what we're talking about here in this section. So when a company fails, like typically in any bankruptcy proceeding, there is a list of who gets paid back first. Like if the company has bills it has to pay or expenses it has to pay, it's a list of typically who gets paid their money first that this stable coin company may owe and from whatever assets remain with that company. So it's like, what's your place in line at a store? And your position in line determines if you get served or not. Because they feel like if you're number 1, if the company's going bankrupt, you may get your money. But if you're number 20, by the time they get to you, you may not get your money. So this is what this bankruptcy priority is talking about. So in a traditional bankruptcy line, the first people to get paid is the lawyers and court costs to run the bankruptcy, to go to process it. Then second is secured creditors, people who are loan money with collateral. And then the third is like employee wages and benefits. The fourth, taxes owed to government. And the fifth is general creditors, everyone else, including customers. So the Genius Act establishes a new order, right? it starts a new order when it comes to stablecoin companies, right? So section, and Sean, you can give them this real world impact of the why this how this makes sense. In Section D of the stablecoin, that's got to go, but the Jenkins Act, right? It creates a super priority for stablecoin holders, paying them before even lawyers in bankruptcy if reserves are inefficient. So stablecoin holders receive priority over all other creditors, including creditors normally paid first, like administrative costs. So I gave you before the way it used to be, but in 11D, it says that stablecoin holders receive priority. So who is first in line now? I just told you who receives priority. Stablecoin holders, right?
That
Right.
right there, when I read that, I was very shocked because you got to
Mm-hmm.
understand because of this Genius Act, that is in place to keep the stable holder made whole first. You see, normally is like you said, it's the court system and the other companies that get the money, and then wherever left over is back to I say the
Holder.
consumer. Yeah, holder. So that says a lot. You already said if the stablecoin companies go bankrupt, it's all set aside the reserve assets for the stablecoin holders first. So I think that's a really great deal.
Yeah, I think it's great. I think it's great protection for the stablecoin holder. So again, like we said, this Genius Act provides some great protections for the stablecoin holder. So we just gave you one about the bankruptcy proceeding, and I'm gonna give you this real world example, right? So in 2022, there was a crypto lending company called Celsius that went bankrupt. And Celsius was headquartered in Hoboken, New Jersey. You smiling? You heard this company, Sean?
Yes, I have.
Okay, so Celsius maintained offices in 4 countries and operated globally. And so, what users could do, they could deposit a range of cryptocurrency, digital assets, including Bitcoin and Ethereum, into a Celsius wallet to earn a percentage of yield, and they could take out loans by pledging their cryptocurrency as security. And so the company also facilitated lending and borrowing for its users. And the depositors could earn interest by depositing their qualifying cryptocurrencies with the rate of interest dependent upon the type of cryptocurrency they deposited. So customers thought their money was safe, right? They
Mm,
discovered that when the company went bankrupt, they were treated as unsecured creditors. So that
mm.
made them, what did I say? I gave that list, right? General creditors, that's dead last in line. So they were dead last in the order to get paid in line. And like I told you an example earlier, if you're number 20, which I'm just making up that number as the last, you may or may not get your money. So people lost billions while lawyers and secure creditors got paid first. And the company filed for Chapter 11 bankruptcy on July 13, 2022, 1 month after pausing withdrawals. People could no longer even withdraw. And it says the declaration that was filed the following day reported a $1.2 billion deficit in the company's balance sheet. So they owe people $1.2 billion.
And I guess they ain't get none of that money.
What it say? It says that people lost billions while lawyers and secured creditors got paid first.
And that
All
is
right,
so wrong. That's so wrong. So wrong.
right,
But
right,
I remember when that took place. I remember that it was all over the
right.
news.
So it's a sad thing, but again, this was this Genius Act. That's why we're giving you these examples to make sure that you really have a clear understanding of what this Genius Act is doing. So we just told you the Genius Act put a clause in there, um, in 11D. I said, where it establishes the order of priority for those who hold stablecoins if the stablecoin issuer goes bankrupt. So, and I'm gonna take this one more thing. This is like aha for you. So think about the FDIC, right? You know what that does, right? The FDIC insurance covers $250,000 per bank account. So it insures you up to $250,000 of your money in bank account. But under the Genius Act, if you hold $1 million in regulated stablecoins, you would have priority claim to that full million of reserves. So that's coverage of up to the million in reserve. If the company goes bankrupt, with you being placed number one in line to get paid if they have any money left over, that places you a priority on you getting your money back. And that's even stronger than the $250,000 that covers your US dollar bank account by the FDIC.
You know what that means? That's 4 times that of the FDIC.
It is not 4 times. Like it's dollars as an example. It could be $10 million. Yeah, it's not just the dollar amount. I just gave a dollar amount as an example.
Gotcha.
So
I get
I'm just saying that the FDIC stop has a cutoff at 250 million.
the 50. Yeah.
I mean, not million, 250,000. I'm sorry, 250,000. But
Well, that's a lot of money. 250 million.
I didn't mean that though. The FDIC only covers you up to $200,000 per bank account. But I just wanted to give you the comparison of the protection that's written in 11D. Now, remember, the company must have it to pay you, but at least you're number one in line, and it's not a dollar amount limitation like the FDIC that we see that we've seen in the act.
Now
So this
I
is
got it.
okay.
That
You
was
got.
Yeah. That makes a lot of sense.
So it could be $10
Correct.
million. It could be $5 million. It could be $700,000. It could be any number. The number really is irrelevant. What's relevant is that you get placed number one. You're first. All right. All right. And so this is a complete reversal that we understand of how traditional bankruptcy work. And it just shows how seriously Congress takes stablecoin consumer protection. So we're gonna jump right in to our next part. Who can issue stablecoins? What types of companies can issue stablecoins? So it's not just anyone that can create stablecoins anymore. So the law has a strict licensing system that they have in place about who can even create stablecoins. So Sean, you could tell them who's allowed under Section 3A, the limited users.
Anyone who is not permitted payment stablecoins issues from issuing stablecoins, the permit categories are banks and credit unions. These traditional
Institutions that they're
financial.
familiar with. So yeah, so you don't got to go into that, Sean. It's just banks and credit unions. Y'all should know what banks and credit unions are. And then who else can do it?
The OCC qualified non-banks issuers, and third, the state qualified entities.
All right. Then, so basically, what he just said, like you already know what banks and credit unions are. The OCC qualified non-bank issuers. These are brand new. It's a brand new category under the Genius Act. And think of this as companies like Circle, which makes USDC or Paxos. They have to get approved by the OCC to settle the same the same regulator that supervises the big banks. So they have to be approved. So any OCC qualified non-bank user, that's what that category is. And then also state qualified entities. The states can license stablecoin issuers, but that's only if the state's regulations meet federal standards. So the states can also say who can make a stablecoin, but like I just said, the regulations have to also match the federal standards. So if you're not on the approved list, you cannot legally create stablecoins in the U.S. Period. Period. All right.
That's very interesting.
All right. So you're right. All right. You want to go to the next part, Sean? The corporate limitation. All right. So the corporate limitation. This involves that the Stablecoin Certification Review Committee, just the SCRC, which generally acts on a 2/3 vote. Except that large companies not primarily in the finance need unanimous committee approval to issue stablecoins. So what is the SCRC? It's composed of 3 people: the Secretary of the Treasury, the chairperson, the chairman of the Federal Reserve Board, and the chairman of the FDIC. And again, we just said that the rules that govern this committee, they used to have, for things to be approved, they have to have a 2/3 vote. I mean, 2 out of every 3. For big tech companies, all 3 of them must vote yes. It must be a unanimous approval. They must consider financial stability risk. They must evaluate data privacy protections, and they must make a decision within 180 days of application. Their approval can be revoked if conditions change. Companies must apply before issuing any stable coins. Again, the committee has 180 days to decide. The approval is confirmed by the Treasury Department. The Treasury Department publishes all approvals publicly within 90 days. So you can check to see if these companies have this approval through the Treasury Department, because it will be published within 90 days. All right. This stuff's serious, ain't it?
It is. I know a lot of the Genius Act, but I didn't know all of this part of the Genius Act, how in depth they really went into to make sure that they cover every landmark that we're talking about. It's very interesting just to hear some of the more information that is out there, especially with the bankruptcy.
Right. And so I just want to bring this home again to make sure because I said this video is going to be comprehensive for you to understand. And so an example of this would be if Amazon wanted to launch an Amazon coin tomorrow, they would need unanimous approval from all three committee members. Why? Because that's a big tech company, right? A big tech company. So they would need unanimous approval because it's not a traditional finance company. And so they would have to get approval from the people that I just said, the SCRC committee, which is the Secretary of the Treasury, the Chairman of the Federal Reserve Board, and the Chairman of the FDIC. They would have to go through application process and get approved before they could issue their stablecoin. So Congress is saying that big tech companies can play in the digital stablecoin space, but if they can handle it responsibly, but they have to make sure that they can follow all the rules that's in this Genius Act as well. All right. So Section 4, this is going to talk about, so how does your life change with this? So how would it change their financial life? So for everyday users, the safer digital payments, you want to talk about that?
Yeah. Currently, when you send money international through traditional service, your bank convert your dollars into intermediate currency, which it sends through multiple corresponding bank, and each taking a fee. Then it converts it back into a destination currency. This process is more
expensive and
is
slow.
expensive and slow. But yeah,
No, you're good. It's good. It's good.
no, I was just saying mainly the banks. It takes your banks a long time to convert the payment over. So during that process,
It's good. But let me just jump right in and cover you. It says that basically he's just telling you that when you send your money internationally, your bank sends it to an intermediary, right? And then it goes through correspondent banks, right? And then each one of those correspondent banks, so Bank A sends it to Bank B, which is a correspondent bank. Bank B sends it to Bank C, which is another correspondent bank. So it's bouncing to these little different banks to get it to this intended destination. And each one of those little banks is taking a fee out of them transferring or being a part of that. So that process to send it internationally slow. You may say, oh, it don't take that long, but you don't see the path digitally that is happening and that why you have to pay those fees. So, but with regulated stable coins, you send digital dollars directly. So the recipient can either keep your digital dollars or convert them into their local currency. So the point of that is it just takes out the middleman. No multi-day delays as well. So it don't have to go to Bank B, Bank C, Bank D till it gets to the destination. Those are the correspondent banks that we're talking about. So that's how your digital payment goes from A to B. Period. Not A, B, C, D, E. It doesn't have to do that. I hope that makes it clear. So let's see. So the e-commerce revolution one thing that we want to point out for that is that when you skip those correspondent banks, that means that fees go down, right? Because before the fees got passed on to the consumer in higher prices, right? So it could be $20 or $30 to send that money overseas or wherever I'm sending it, because the person who's facilitating this transaction for me, they're saying, well, it cost me $20 to send it for you. So I'm gonna make sure that whatever when I'm charging you to send this money over, then I'm gonna pass that $20 cost over to you. right? So because they don't want to pay it, they want you to pay it. They want you to pay the fee. So what we're saying is that this means just lower prices for you because they're not having to pass an expense over to you, and you get instant settlement.
And then this thing about cash and stablecoin. When you go to a Western, you send international, and it costs you $30 a fee, and that's not the worst part. It takes 3 days to get there, and then it's going to be a fee, and it's going to take 30 seconds. So we already know which would you use a stable coin or would you use cash at the Western Union. That's no brainer right now. But for me,
right. Well, for you, you may not be, but hey, you make the choice. You choose what works best for you. But here's another interesting part. You can now access services through apps and platforms that aren't traditional banks. So, digital wallets that pay interest on your stablecoin balance, international money transfers without even having to use a bank. Because like I told you, it's going from me to this intended person. I don't need a correspondent bank anymore to like help facilitate that transfer or that transaction. So I can send it straight from me to whoever internationally, they get it. And then when they get it in the stable coin that I use, they can just transfer it into their location's currency, the currencies they use every day, or they can just keep it in stable coin form. It's up to them. Let's talk about the implementation timeline. The implementation timeline for right now. The new stablecoin users must meet the Genius Act to get their licenses. Federal regulators have started the rulemaking process, and existing stablecoin companies can continue operating under current rules. So the law takes effect on the earlier of the 18 months enactment, January 2027, or 120 days after final regulations are issued. 1 year after signing, which is July 2026, federal regulators must publish final implementation rules. 3 years from signing, which is July 2028, all platforms like Coinbase, Kraken must only list stablecoins issued by approved companies. This is the listing registration restriction timeline. Then let's see. So what's next? So like I just said, all those companies must only list stablecoins on their platforms that are approved by July 2028. So that means that if it's not an approved stablecoin, it can't be listed, right? Right.
Well, we know.
Oh,
now I was gonna say we know
right?
one. Yeah, we know one.
Right. Right. So you may ask yourself, but where can you see the list of approved stablecoins? The Treasury Department will maintain a public registry on their website listing all compliant stablecoin users. So you're able to check them out. And then after July 2028, if they're non-approved, it will become illegal to offer to U.S. customers after July 2028. Platforms must delist them or face $1 million in daily fine. Daily.
They're daily fines. $1 million. That's a daily fine. I don't know who came up with that, but that's a lot of money.
That's a good reason to motivate to be in compliance.
Well, yeah, I agree.
So this timeline gives people, the existing players in the stablecoin area, time to ensure that they can meet the higher standard. And so this really is just the foundation of the Genius Act and how it protects you. So I know this was a longer video, but we told you that we were going to do a deep dive into it. And we wanted to make sure that we really slowed it down so that you could really have a good understanding of what we cover in the first section. And in part 2, we're going to cover some more complex details, how the bankruptcy priority actually works in practice, what happens to foreign stablecoins and international compliance, enforcement mechanisms that will police this new system, and what this means for future money itself. So we're going to cover that in part 2 of our video. Let's see, and also just to do a quick reminder, grab our free guide, our beginner's guide to cryptocurrency and XRP. We packed it full with juicy information for you. The link is in the bio. and in the description. And then also join us on Patreon if you haven't had the opportunity to do so. There we publish a lot of information, a lot of insights that we don't get to share on YouTube. So, and you're able to have a closer connection with us and the things that we are sharing with our community there. And then you'll also be able to chat with the community within our Patreon as well. All right, Sean, you got anything else you want to add?
I do. I'm gonna say thank y'all for this rocking with us. I know this is probably the longest video we ever done out of all of the videos we have. My wife did a wonderful job giving out information. I know I did a little things, but she did a wonderful job. I know you did. I'm just giving you your accolades, your flowers, as they say. Also, you're welcome. Just make sure that you take the information of what my wife was saying about the free guide, because we want you to be really informed of what's coming. And please share this video, like it, subscribe, and leave comments if you want us to do other topics. I say, and also we are not financial advisor. This is educational
This is just to
purpose.
help. Yes. And as my husband always say too, if you watch the video to the end, put an X in the chat, I keep saying chat, in the comments, so we know that you at least got to the end of this video. And if you found it helpful, please let us know too. Like I said, I put a lot of time, and so did my husband, into going to a deep dive and making sure that we were able to give you examples to reinforce what we're saying. So if you are still unclear about something we shared tonight, you can drop it in the comments, let us know. And if we have the answer, we'll share it. If we don't, we'll let you know that as well. But thank you guys for being a part of our Digital Collective 828 family. And until the next video, you guys have a great rest of your day.